Let me start with an introduction to Maybank. Our selected bank is Maybank or Malayan Banking Berhad. Maybank was established in 1916 and is headquartered in Kuala Lumpur, Malaysia. Over the year, it has grown from a domestic commercial bank into one of the leading financial institutions in Southeast Asia, with operation in more than 18 countries. In terms of organizational structure, Maybank is governed by the Board of Directors and supported by the Group Executive Committee. Its operations are divided into several major business segments, including community financial services, global banking, Islamic banking, insurance and takaful, as well as international banking. This structure enables the bank to serve different customer groups effectively. Looking at its key financial indicators in 2025, Maybank recorded total asset of more than RM1.05 trillion, net profit of RM10.51 billion and return on equity of 11.7%. These figures indicate the bank's strong financial performance and stability. In terms of market positioning, Maybank remains the largest bank in Malaysia by total asset and market capitalization. The bank also has strong presence across Asian countries and is recognized for its digital banking innovation through the MAE application. Therefore, Maybank continues to maintain its position as the market leader in both conventional and Islamic banking services.
Next, I will present an overview of Maybank's main products and services. As the largest commercial bank in Malaysia, Maybank offers a wide range of financial solutions to meet the needs of individuals, businesses, and corporations. These products and services help customers manage their finances, achieve their financial goals, and plan for the future. Firstly, Maybank offers savings and current accounts for daily banking transactions. These accounts can be accessed through online and mobile banking platforms, making them convenient and secure for customers. However, they generally provide relatively low interest returns. Secondly, Maybank provides various loans and financing products including personal, housing, vehicle, and business financing. These financing facilities help customers meet their financial needs and support major purchases or investments. However, customers must fulfill repayment obligations and bear financing costs. Thirdly, Maybank offers credit card services that enable customers to make cashless payments while enjoying benefits such as rewards points and cashback programs. Although credit cards provide convenience and flexibility, excessive usage may lead to overspending and increased debt. Lastly, Maybank also provides Islamic banking, investment, and insurance services. These products support wealth creation, financial protection, and Sharia-compliant banking solutions for customers. Nevertheless, investment products may involve market risks, and returns are not always guaranteed. Overall, Maybank's diverse range of products and services enables the bank to cater to different customer segments while maintaining its position as one of the leading financial institutions in Malaysia.
Now, I would like to explain about the impact of digitization. Digitization has significantly transformed Maybank's product and also their services. Firstly, from the customer perspective, banking activities such as fund transfer, bill payment, and QR payment can now be completed instantly through the MAE app and Maybank to you. This has changed customer behavior as people nowadays increasingly prefer digital banking over visiting their physical branches. Secondly, for banking operation, digitization has improved efficiency through online account opening, automated processes, and reduced paperwork. As a result, transactions can be processed faster while lowering their operational costs. And lastly, from a broader financial perspective, digitization supports the development of a cashless society and encourage the growth of e-commerce and digital businesses. It also creates a greater competition within the banking industry, motivating banks to continuously innovate and improve their services. Therefore, digitization has created significant value for all stakeholders by enhancing customer experience, improving operational performance, and supporting the growth of a modern or innovative financial industry.
I will continue with the financial performance of the bank. Starting with profitability performance, the operating profit margin increased from 41.33% in 2024 to 44.62% in 2025. This indicates that the bank became more efficient in generating operating profit from its revenue, reflecting improved operational performance. Next, the net profit margin increased from 30.96% to 33.38%. This shows that the bank earned a higher net profit from each ringgit of revenue, indicating stronger profitability and better cost management. For return on equity, ROE increased from 12.85% to 13.22%. This suggests that the bank generated better returns for its shareholders and utilized shareholders' equity more effectively. Meanwhile, return on assets improved from 1.71% to 1.87%, showing that the bank became more efficient in using its assets to generate profit. Moving on to liquidity performance, the loan-to-deposit ratio decreased slightly from 75.17% to 73.74%. This indicates that the bank relied slightly less on customer deposits for lending activities, reflecting a more conservative but stable liquidity position. The liquid assets to total assets ratio also declined from 4.61% to 4.24%, showing a slight decrease in liquid asset holdings relative to total asset. Lastly, the cash to deposit ratio decreased from 8.76% to 7.94%, indicating a lower level of cash available relative to customer deposits, although the bank still maintains sufficient liquidity to meet short-term obligations. Overall, profitability improved in 2025, while liquidity remains stable but slightly lower compared to 2024.
Next, I will be explaining the bank performance in terms of asset quality and capital adequacy for the years 2024 and 2025. Firstly, under asset quality, we analyze three ratios, which is the non-performing loan ratio, loan-to-deposit ratio, and deposit-to-shareholder funds ratio. For the non-performing loan ratio, the formula is NPL divide net loan. The ratio is decreased from 0.69% in 2024 to 0.65% in 2025. This indicating that loan quality has improved and the risk of non-performing loan is decreasing. Next, the loan-to-deposit ratio. The formula is cross divided by total customer deposit. In case of LDR, there is a decrease from 75.17% to 73.72%. This means the bank is using a slightly smaller portion of customer deposit to provide loan. As a result, the bank is maintaining a comfortable level of liquidity and is in a better position to make customer withdrawal and other financial commitment. For the deposit to shareholder fund ratio, the formula is total deposit divide shareholder fund. The ratio also declined from 3.95 times to 3.78 times. This is because bank reliance on customer deposit is decreasing compared to shareholder investment. Next, I will continue with the capital adequacy, which is the risk capital ratio. The risk capital ratio is increased from 18.32% in 2024 to 19.59% in 2025. This ratio clearly shows that there is a positive change in the capital position of Maybank as compared to its risk-weighted asset. For the core capital ratio, is increased from 50.43% in the 2024 to 50.79% in 2025. This shows that the bank is maintained strong, high-quality capital and remain financially resilient.
For management soundness, we use the administrative expenses to total expenditure ratio to measure how efficiently Maybank managed its costs. In 2024, the ratio stood at 3.86% and it improved to 3.59% in 2025. This decline indicates that Maybank was able to control its administrative expenses more effectively relative to its total expenditure. Overall, this shows that Maybank's management became more efficient and financially sound in 2025.
In conclusion, based on our analysis of Maybank's group performance from 2024 to 2025, the bank has shown consistent improvement across all 5 key areas, which is profitability, liquidity, asset quality, capital adequacy, and management soundness. The bank recorded stronger returns, better cost efficiency, and improved credit quality, reflecting its resilience in the competitive financial landscape. However, Maybank should continue to monitor its liquidity position closely as slight declines were observed in 2025. Moving forward, a balanced approach combining digital innovation with prudent risk management will be key to ensuring Maybank's continued growth and long-term success. That's all from us. Thank you.